What's up, everybody? Welcome to the latest edition of the Real Estate Podcast. Please check us out on Ham Radio, and also check us out on the Real Estate Podcast on Facebook, on Instagram, on LinkedIn. On Instagram, we're at the _estate podcast_. And please like and subscribe on YouTube, the Real Estate Podcast. We have a great show for you today. My name is Meldon Dickens, along with our host, Al Davis.
Thank you. Good morning, everybody. Thank y'all for joining in. Good afternoon. Thanks for joining to the podcast. Please subscribe. Before we continue, please go to the subscribe button and like and subscribe so you can continue to get the content that we're offering. But today on our show, this is a show that I've been trying to get this guest since we first started the podcast. So you know how you have a blood brother, and then you have a brother that's not blood, but he's just like a brother to you. Well, this next guest is like a brother to me. He's probably my closest friend in the industry. He started Hard Money Bankers, which is one of the top hard money lending companies in Maryland. He's a lawyer, went to the University of Baltimore, got his law degree, so he's a lawyer. I lean on him for advice and everything, and he helps me with everything. So this is probably one of the most important people to me in the industry, and I just wanted to bring him on the podcast. So y'all gonna learn a lot today. So just make sure you look at the show all the way through. He got a lot of good advice from you. He's probably one of my best friends. His name is Jeff P Shiller with Hard Money Bankers. So let's welcome him here.
Welcome, Jeff.
Thank you.
Thanks for coming on, Jeff.
No, thank you very much. Thanks to both of you for having me. It's really nice to be here and share some knowledge and catch back up with you. We don't see each other enough, so I'm happy that I'm able to come down and see you.
I'm happy too. I'm nervous. I don't know why I'm nervous. I haven't been nervous on any more podcasts, but Meldon's gonna pretty much ask the questions. But I'm so excited. I just want to get what I have to say out the way. You started Hard Money Bankers, which is one of the top hard money lenders in the state of Maryland. You're a lawyer. I lean on you for all my legal stuff. We've been together for about, I want to say like 20 years, right?
Yeah, I think, it's or more.
Yeah, 20
more.
years or more. So
yeah.
I want you to talk about, because I think a lot of people want to know, Hard Money Bankers is a multi-million-dollar company. Can you explain to me or tell the people how you started Hard Money Bankers and how you grew that company from zero, basically, to a multi-million-dollar company? How'd you start that company?
Well, that's a great question, and it's funny you asked that question because you're responsible for it. You don't even know it.
Okay.
Yeah.
Let me hear this one.
Yeah. No. When I first started in the business, I didn't start as a hard money lender. I really had no intention to start as a hard money lender. I started as an attorney, graduated law school. I was working at a law firm doing a lot of guardianship, real estate type matters, trusts, and then I decided to get into the real estate full time. So that's kind of, I think, where we met when I first started doing the title work. So I opened up my title company, and then I don't know how we met in that regard. I think you were just buying stuff down in the city, and then we somehow we met. And I'll always remember the time that I was in my office. I'll never forget it. And we had become good friends by then. And you called me up one day and you said, hey Jeff, how quick can you pull a lien sheet? For those that don't know, anytime you close a real estate transaction in the city or the county, you have to order what's called a lien certificate that shows all the municipal liens that have to be paid at the time of closing. If you don't have it, you can't record your deed. Right. So it's always important to get one of those, and we have to get one of those as a title company to clear the title. But it takes a little time, depending on how busy the city is. It could take weeks, a week, 3 weeks, just depends on what's going on in the real estate market. And you called me up and said, hey, I have a property I want to settle on. Can you get a lien sheet? And if I get a lien sheet in a couple days, can you get title back in a couple days? And I said, absolutely, we can make that happen for you. But there's no way your lender's going to get you closed in a couple days. Good luck getting Wells Fargo to close a loan in 3 or 4 days. And you said, well, don't worry about that. I've got that covered. And then I said, okay, well, I won't worry. Al tells me not to worry about it. I won't worry about it. So a couple days later, I got some instructions from another attorney, and it said, if you do A, B, C, D, we'll have money to your office. I did A, B, C, D. I had money to my office, and we closed that transaction. Wow. And that was my first exposure to hard money. And the light bulb went off, and I said, this is the greatest thing since Wonder Bread, and Jif peanut butter. And I just dedicated my career from that point forward to, lending my own money, some of my family money, We started to gain momentum with some other investors that came in, people wanting money or bringing deals, and it just kind of came about that way. And then kind of running along the same time that I was doing the title, we were just building up the hard money stuff. And then finally, right around 2007, when the market started to blow up, all of a sudden, within a day almost, it seemed like, the institutional money just collapsed. There was no more money for investors. There used to be a lot of institutional money for investors back in the late 90s and early 2000s, and then it blew up right around that time. And so it was just, I didn't have a crystal ball, but I was kind of lucky because at that moment, everyone needed hard money.
Yeah.
And we were one of the first ones to make it professional, I guess, if you want to call it that. We came in and we said, hey, look, prior to this, there were some well-known guys in town that did hard money, had a lot of hard money out there. But you had to kind of know someone who knew someone that knew someone. You'd have to call their house, and you might get yelled at by the wife if you called at the wrong hour. Yeah. And so we decided to professionalize it, where we set up a website and, had the phone answered all the time and just did all the things necessary to make it more of a professional operation. And I think because of, and we were one of the first ones that really started getting heavy into Google Word advertising. And back then it was just super cheap. There wasn't many people in our space on the internet. So it really was in a weird way, it was just a fortuitous time to do it. We were kind of lucky. The market kind of hit, everything kind of hit right at the same time. And then I brought in with me Jason and Chris, who, they handle most of the day-to-days of the operation. I handle more of the underwriting questions and the loan documentation. And it just kind of took off from there. And then over the course of time, I also started representing other hard money lenders. And so my world became very much about understanding and representing lenders in that space.
Shout out to Jason and Chris. Guys, we look for sponsorships too. So if y'all let us know if you want to sponsor this show. What was you had a title company also. Yeah. Was it Roland Title your first one?
Yeah, that was the first one years ago, and that's where you and I originally met. Then over time, life changed a little bit, and I was doing some other things in my legal career, and kind of transitioned that over to something else. And then, but now we have another title company that specializes with investor transactions and hard money. True Title Inc. is our company. True Title Inc. TrueTitleInc.com, and we do all types of commercial, residential real estate transactions throughout the state of Maryland. And
So if anybody's looking for a title company, True Title.
True Title.
True Title in Clarksville, Maryland. So I remember this is something that stands out to me. You're not going to remember it probably, but I did a deal. I had Callow Street and Brooks Lane, 2 deals. The bank gave me, one was a 6-unit and one was a 4-unit. The bank gave me both of the properties for $55,000 a piece, right? I found a buyer that bought both of those properties for $300,000. For $300,000.
I remember those properties.
Yeah, so I went and did the deal at Jeff's office, and he had to cut me 2 checks each for over $100,000. And Jeff was like, "My goodness, why am I doing what I'm doing?" He come here making all this money. Yeah. So then, Jeff and I built a great relationship, man. I'm proud of what he's accomplished. He's probably the closest person to me, man. I love him a lot. So he built Hard Money Bankers up. So he has his hands in a lot of different pots. Hard Money Banking, which is hard money lending. He also has True Title, which is out Clarksville. And he's what are you for Howard County?
Well, I was, for about 4 years, I was the treasurer of the Howard County Bar Association. And they wanted to push me up to, it's natural. You go from secretary to treasurer to vice president to president, whatever that is. And I just wanted to stay in my lane as the treasurer. Because the money part is what I knew, so I stayed there. But yeah, I was doing that for several years, and I have my law practice, my own law firm. I'm a solo practitioner. but work within that title, doing contracts. I do a lot of contract work for investors. I just did one yesterday actually for somebody that was doing a wholesale deal, putting the investor contract in place and then doing the assignment on the backside. And there's some little special things that you need to understand about the type of transaction that you're doing. I see a lot of mistakes because, like I was telling Mel earlier, that there's this intersection between contract and title work, and a lot of times the investors don't quite understand, that if they set up the transaction the wrong way, it creates a title problem for us to actually make the transaction happen. So some of my time is spent helping people structure it and then document the right type of transaction, whether it's a subject to, an assignment, a flip, whatever that is, and then kind of guide them through that.
And that's what I try to tell everybody. That's a big part of this podcast. We want beginning investors as well as seasoned investors to know who to align themselves with. So you want to put the right people around you so that you can ensure your success or increase the probability of your success. Like we teach a lot in the podcast, align yourself with the proper people, surround yourself with the right people because it's going to increase your probability of being successful. And like I align myself with Jeff. He teaches me a lot legally as a friend, stuff like in the business. So if you guys can find somebody like that to attach yourself to, you can really learn a lot. For instance, like I learned from you, Jeff, confess judgments. I never knew what a confessed judgment is. So now if you could do...
Well, hopefully you didn't learn it in a bad way.
No, I didn't learn it in a bad way. Right. But like now you could put in your assignment agreement, and let me know if this is right or wrong, Jeff. If someone does something to you, does it avoid you from going to court? They automatically confess guilt, right?
Well, it's not an automatic. I mean, it's a way to say that if, say, a borrower under a loan defaults, or if somebody under a contract doesn't do what they're supposed to do, it allows you to go into court and file a confession of judgment against them, which is it just kind of cuts out a lot of the different steps involved in a regular court case. And you can file this confession of judgment for a certain dollar amount that you're entitled to. It doesn't mean that that person doesn't have the right to come into court, over the next 30 days and file something, and then you're back into the battle. But if they never bother filing something, then you have a judgment against them, and that judgment will follow them for 12 years wherever you register the judgment.
See, I bet you guys didn't know a lot about that. So I'm going to let Meldon start off with some questions. I know he had a lot of questions to ask, and I'll come back in a little later on, and we can talk about some other things.
Yeah, so it was interesting hearing your story, Jeff. I know Al's talking about you a lot, so it's good to put a name with a face. I wanted to talk about sort of what's going on in the market now. I know interest rates are going up. I know they're kind of saying it's a buyer's market. It's getting ready to shift from a seller's market to a buyer's market. And so with that, how is that affecting sort of like your business in terms of the hard money? What are you seeing, some of the trends? And for like our newer investors, how would that affect someone who's newer, because obviously they don't have the experience? And I know I'll ask you a couple questions there, but
they all kind of tie together nicely. And I unfortunately I didn't bring my magic 8-ball with me, so I can't shake it and give you a firm answer on what's. But as we sit here, I think today, the month that we're in, we're just starting to see inflation's been really hitting hard. The rates are now up to, I think the standard rate's now up to like 7% or so.
Yep.
7. They might fall a little bit again. I heard some rumors about that today, or some news stories. But likely they're going to continue to rise up some, and so we're going to be in a place of interest rates that we haven't been in many years. When was the last time we were at those kind of rates? I mean, it's 20 years.
2000.
Yeah, I mean, it's been
early
a long
2000.
time.
Yeah.
So I think a lot of the old school tricks of the trade are going to start to resurface a little bit. I think you're going to start to see some deflating values. There were some reports that may be up to 20% in certain. Now, I'm not saying around here necessarily, because we're kind of insulated from some of the mass casualties in the rest of the country because of government around here. But I think that certainly we're going to see some deflation in the housing market, and a little bit of a slowdown, and that will turn it into a buyer's market. And certainly as the rates go up and it gets more and more expensive to, when you're buying a house at 3.5% and then you're at 7%, you're doubling your payment, your P&I payment. So, what does that do?
Right.
I mean, it's going to certainly impact pricing. So I think we're going to definitely see a shift. I think we'll start to see where investors will have some great opportunities. There is money to be made in every market, and that's kind of what you learn. The longer you're in this business, right, Al, I think the thing that you learn is there's money in every market.
Right.
If it's a market where people are bailing out and real estate's going down, well, that's maybe where short sales come back strong. And I think also that there was a time years ago where people were, FHA was a really big deal where people could get an assumption of an FHA mortgage, right? Conventional mortgages, you can't do that. An assumption is when someone else comes in, buys the house, and takes over the
mortgage payment, right.
that mortgage at that interest rate. So if you've got a mortgage interest rate at 2-3%, and now they're up 7, 8, 9%, your house looks really attractive, to somebody buying an FHA, as a first-time home buyer or somebody who's maybe can't afford a 7, 8, 9%. So they're assuming that mortgage. So I think some of that might come back. In addition, I think subject twos, they were real quiet for a long time.
Mm-hmm.
I think you're going to start to see a comeback of I've already seen an uptick of subject twos in my office where people are buying houses, and rather than getting a new mortgage at 7%, they're taking over the house subject to the existing financing that's on the property at 3 or 4%. It could be an out-of-state seller that just doesn't want to deal with the toilets, trash, and tenants anymore, and they're more than happy to take back some of their equity out of it and let somebody else take it over and give them the low interest rate. So I think that's going to make a comeback, certainly. Where else does it hit? Who knows?
I'm wondering, like, this is my thought, and I don't know, you and Al may have more expertise, but I'm thinking the increase in interest rates is probably going to hurt more of those first home-time buyers, right? Because, I'm thinking the folks that are around, they were barely qualifying at 3%, 3.5%, buying a $250,000 house, are the people that may get pushed out now. They can't qualify because the interest rate comes up. As you said, their P&I is going to increase. Yeah. So that may be the thing that kicks, say that person making $50,000, $75,000, first-time home buyer, out of that market. So what do you think that may do in terms of like what investors may have to do in renting, buying, holding, just in your experience? And Al, you can jump in on that one too.
Yeah, no, I mean, maybe I can just kind of give you a little microcosm of what I just saw yesterday. One of my clients, he's a small builder, but he built on a couple lots out in off Rolling Road up there in Baltimore County, and it became a financing problem for the buyer, and the price had to get adjusted because it was one of these first-time or newer home buyers, and it was an FHA loan, and of course houses are not cheap around here anymore.
Right.
And the deal almost blew up because of property taxes, and all of a sudden, because of the higher interest rate, when they thought they could afford it, all of a sudden now the debt to income ratio didn't work for this person, and it almost blew the whole deal up. There was a lot of wrangling back and forth in the last couple of days before closing. So I mean, definitely a lot of that stuff for that. I think you're right about that the newer buyers and maybe blocked out of the market a little bit because of the higher interest rates and having to do that. But we're so early on in this. I think it's going to take another 6 months to really start to see, looking backwards, to see kind of how it's really starting to impact people. That's the one thing about housing that's always the problem, is you can kind of try to predict it, but it's kind of a lagging indicator, right? As to the market.
Yeah. But what do you think about commercial? Because one of the things we've been witnessing, because Al and I have been trying to do some commercial investments, is it slowed down tremendously through the pandemic, right? Because everybody's working from home. Yeah. So a lot of these commercial leases, folks, they weren't as profitable anymore. Like a company that's going to put 20 people in the office, all of a sudden, I got 20 people at home, and I can just do their Wi-Fi connect. Yeah. I don't need to pay $10,000 a month for this nice, plush space downtown or in some swanky office facility. So have you seen any kind of trends in that in terms of like the lending and all of that goes on with commercial?
Rockville. That's what happened with Rockville.
I think that, we had a 50,000 square foot building down in Rockville that Al helped us with, and in a different kind of market, I think that you'd have, that'd be flying off the shelves.
Right.
And then once the pandemic hit, it got quiet fast.
Yeah.
So it's starting to come back. I think people realize that staying at home might be a lot worse than what they originally thought it was.
Right.
For some people, it works. For me, I like to be around people.
Right.
And I think people are social people, and I think that plays itself out in the world. And so you could try to make it so that you have no offices and people work from home, but in the end, I think people want to congregate. They want to be, and they want to. Right, there's some camaraderie there, and they want to be there. I think hybrid is here to stay. I don't think it's ever going to go back to full time in certain situations. Yeah. A lot of times now, I see in the help wanted ads or the things like that for, like, say DC or something, where it's always hybrid position, remote position, hybrid, because people now, I think, especially the younger generation, they've kind of grown into it. And they're like, if you go in an interview and they say, well, you have to be here every day full time, like, no, I'm not doing that.
Right.
So it's the new norm, I think.
Right.
And that's going to play itself out in the commercial space. I've seen a trend, much bigger trend towards, like, executive office leasing or collaborative space where people go, and that's very successful, I think, because it also allows people to kind of not have to spend a lot of money for office, but then also have that collaborative spirit. So that's what I've seen. But commercial has been relatively strong. Most of my commercial lenders are still saying there's plenty of deals out there. They're still. I think some of them are starting to hedge against certain classes of commercial, but generally, I think they're trying to, like, not onboard too much risk in any certain category that they might not like as a bank. But I think commercial is going to stay strong for a while.
Yeah, good. So when somebody who is new to the real estate business, so I'm working, I got a good corporate job, I want to get into maybe buying, holding, maybe turnkey properties and some investing, maybe get some passive income. What way could I maybe connect with, True Title or Harmony Bank? Like, how could someone getting into kind of connect with you? Is there certain products that you may have, if your company, or as a person who has all this experience, from contracts to the legal side, to the title side, how would you advise somebody getting in?
I'd say for a newer person that really that has a job and is looking for it as a sideline. I think that's the first thing you have to make the decision of is how active are you going to be in this business? Because the mistakes that I see people make, you can correct me if I'm wrong, Al, but the mistakes I've seen people make are they think that all they need to do is just kind of run out there and go get a realtor to find them an investment property, and they don't have to do a lot of. They'll just I'll find one or two, and this is a business. It's a business like any other business. Investing is a business, and you have to decide what your business is. Mm-hmm. And so if your business is something else and this is a sidelight, then you have to kind of take one route. And if you're kind of jumping in, or your goal is to jump in much harder, then that might be a slightly different route. In either way, you're going to need to have resources with you that know what they're doing from the beginning. And so surrounding yourself with this type of program, or having a mentor, I think that's critical. Yeah. So having a mentor that knows the ropes. And I think a lot of people get caught up in the beginning of, well, I don't want to give up 50% of a deal to a mentor, or 80% or whatever it is, because I found the deal and I want to make 100. Well, you might want to make 100% of the money, but you're going to get burned if you don't have a mentor walking you through. So I always say, if your first 5 or 10 deals are with a mentor that can kind of help walk you through, you might not make the money that you want to make, but the experience is invaluable. It's like a college degree, but in real estate. So I think, and then I think defining what it is that you want to do. There's so many different areas of real estate. And I think some of the mentorship helps with that also, in terms of, I want to do lease options. I want to focus on subject twos. I want to focus on fix and flips. I want to focus on wholesaling. And, here's how I'm going to do it. Trying to be a jack of all trades, what that leads to, right?
Right.
A master of none.
Right.
So I think defining very clearly what your involvement's going to be, defining who you're going to surround yourself with to get it done, and understanding that there's a learning curve, and making sure that you're walking through the learning curve. So, and the mentor is going to lead you, hopefully, if you're with the right mentor, that's where it all begins, leads you to the right people that are going to be honest and moral, and get you through your first deal without losing your skin, because that can happen.
Family, he said it. You heard it from Jeff P Shiller. He started a multi-million-dollar company, several companies, and he said, you need a mentor. We got it right here, Mr. Davis. Come check us out, Sky Miles LLC. I had to do that plug for you.
No. Anybody want to talk to us about some things, we talk to them.
So this is another thing that's key. We were talking about subject twos and some of these terminologies people may not understand. We were talking about leaseholds, and you said that's something that you think might get. Can you talk about that a little bit, like what that may do for people who, because they're specialized and there's nuances. Some people want to get into multi-units, others, just want to, rehab and flip.
And that goes back to what I was saying, is you want to define first what you want to do, and then you want to work hard in that one space and kind of stay in that lane, and maybe not try to do everything. You can't do commercial and this and that and this all at the same time, because you'll end up hurting yourself. But we were just talking about leaseholds, that a lot of people don't kind of understand what they are to begin with, which is understandable. I mean, I didn't know what it was before I was a lawyer and practicing in real estate. But Baltimore is a very unique market. There's very few markets in the country that are like this, and I'll tell you why it's important in a minute. But Baltimore, for whatever reason, many years ago, developed as a city where it was, I guess, maybe too expensive to own the land and the building on the land. Mm-hmm. And some creative developers decided, well, we'll sell the building, but we'll keep the land.
Ground rent.
And that's the ground rent. And and it made it cheaper back then. And it was a genius idea at the time, because a developer could keep the land in Baltimore and then collect rents on the land. And, the cap rate on that was, at that time, depending on when the ground rent was created, could be 5%, 6%. And that lasts forever, for the life of that person that owns the ground. So if you have 1,000 properties that you develop in Baltimore and sell the row home and then keep the ground rent, you and your heirs are going to do pretty well, just collecting that $40, $90, $120 a year, which back then was a lot, right? And not so much anymore, which is why it's become somewhat of a problem. But that's different than a fee simple ownership. Mm-hmm. A fee simple ownership being that you own the ground, you own the improvements on the ground, and it's 100% yours. You're not paying anyone else.
Right.
In theory, you can get kicked out of a leasehold property. It used to happen, but it doesn't really happen anymore. If you don't pay ground rent for 3 years, they can eject you from the property, and in theory get the property back. That's got a whole nother side story to it that I won't get into. But bottom line is, there's these two different types of property ownership in this area, and there's a couple other states, a couple of other areas that have it, but not many.
Right.
And so when a lender comes in, say it's a hard money lender, and they're a local hard money lender like us, or some of my other hard money lenders that are true local private lenders, they understand what leasehold. We've all been around Baltimore forever. We understand what a leasehold is. We understand that it doesn't really impact the value of the property at all.
Right.
But what's happened, there's a trend that's happened in our market, and this is something you don't know until you get burned by it. One of our investors just got burned by it, which is some of these national hard money lenders, which I'm not disparaging them. They have a great value and purpose in the marketplace, but they operate on more national guidelines.
Okay.
And so nationally, if you're out in California, they don't know what a ground rent is. They don't understand leasehold. They don't understand that it's not a big deal. They don't understand that if you have a leasehold, if you own a leasehold property and you haven't registered that ground rent with SDAT, you can't even foreclose on it. So what's the maximum exposure that a lender could have is maybe 3 years worth of ground rent, $270 if they come out of the woodwork, which wouldn't even happen. Right. A lot of these people are just gone and you'll never hear from them again.
Right.
But all that said, it means that those people not understanding, in California, not understanding what a Baltimore ground rent is or a leasehold, they say, we can't close a loan in a leasehold. And you try to give them the law and you try to show them that, hey, it's okay. It doesn't matter if it's in leasehold. They're just checking a box.
Right.
And so an investor that thought, they had spent months trying to get this deal done with this national lender, and it got down to the very end. They went through all the different things, all the different check boxes they needed done, all the different underwriting requirements, all the different things. And they get to the end and they say, we can't close, it's a leasehold.
Wow.
So yeah, so I think that is definitely something that investors that are out there have to be aware of, that they need to, in the marketplace today, that you got to know who you're dealing with in terms of a hard money lender or a private lender.
That's why it's important to have people on your team that know that stuff.
Yeah, I mean, it's funny. You've been talking about that.
Yeah,
Jeff talked about that. We've been talking about that forever since we started. Surrounding yourself with people. You talked about the mentorship piece. So I think that's critical. Having people that you trust, people with the experience. That's something that I think we can't emphasize enough to the audience, to people. And we had an experience yesterday. I want to share this story. I know this is not relevant. We had an experience yesterday. We were going to close on the deal. We're putting the house on the contract. And Al went through his research and saw there was two people that he met. And he called one of the guys and said, hey, are you doing business with this guy? I'm going to put a house on the contract with him. And the guy says, nah, I'm not doing business with this guy anymore. Right. And it so happens that it was some tension, right? The guy was kind of, he was a little pushy, with the EMD. He was a little pushy when we could close. We were saying, hey, look, give us 30 days to close. And it comes to find out that he didn't have the best reputation, or he's had some challenges.
Yeah.
So it just goes to show you, when you're thinking about having people around you, and and I'm not saying, it's like you said, we don't want to say anything disparaging about folks, but sometimes the importance of keeping sort of your name clean, and doing business in a judicious manner, as much as you can. I mean, sometimes stuff happens, right?
Yeah.
Deals blow up, like you said.
Yeah.
Deals blow up. Maybe somebody's financing doesn't come through, whatever the case may be.
Yeah.
But if as much as possible, if you're communicating, because I think that's critical. Because if you kind of get that reputation, Mark Owen said it too. Yeah. Right. If you're going to close when you say you're going to close, if you're going to, you need to be able to
do what you say you're going to do.
Yeah. When you're going to do it.
It's very important. Yeah. And I mean, Jeff is a strong believer in that. I know that for a fact. And I know Jeff's seen people around me over the years. I don't want to say any names, but it's not as ethical. So the best thing I've done since I've been doing this is get all of those people from around me that, I guess they call them takers or whatever, and it's not very ethical. And I begin to put people around me that had the same ethics, same work ethic, the same principles, you know what I'm saying, to keep their name good. So, I mean, then you start to prosper more. You see you prosper more when you get those people from around me. Yeah. You get that energy from around you. But
I think that's such a, I think honestly, I think people kind of just, they say, yeah, but that's out there. That's not me, or that. I think like people just underestimate. And maybe I'm just cynical because I've been doing it for so long now, but people underestimate just how much bad stuff there is out there. I mean, there's fraud. Yes. There's people that will take advantage of you in a heartbeat, and you're not realizing they're taking advantage of you, and that they're just not authentic and honest. Mm-hmm. None of us are perfect. I've made my share of mistakes over these many years, and I if you try to say otherwise, then you're probably one of those non-honest people. But that's a little different than having good intent, operating with morality and ethics. And I mean, I see it all the time. I mean, not every day, but all the time. And you always have to have especially in what I do, being a lawyer and representing hard money lenders, and always have to keep my eyeballs open for fraud, because it's everywhere. And I kind of a whole nother, we could talk on a whole nother level about what I've seen. But I just think that it's important that when an investor gets into this business, that one of the principles, they have to be principled, and one of the principles they have to have is, I'm not going to do anything. It's too easy to cut corners, because sometimes it's hard to do it the right way.
Exactly.
It's hard to do it the honest way. And just too many people, but somehow the real estate gods come back and they get you if you do it the wrong way. And I just that's one of the things I would say to a newer investor or somebody that's getting into this. It's just, you got to surround yourself with people that are honest and that you might not like what they have to say because you don't want to do it that way because you'll make less money than you would cutting corners, but it's the right way to do it. And you'll be around for 20, 30, 40 years, not 5 years before you go to federal prison.
Exactly.
Yeah, I was funny. I saw this thing, Al, with this. They have this some title protection they're selling now for your house. So it's like you know how you get your identity locked, like lock life. You know, you can lock it and you got to pay for it.
Yeah, I heard that.
It's something
It's not. Yeah, it's
new title. It's like people, and they had this guy who did federal time. He's actually advising this company to keep people.
It's not
And he
real.
did it. He stole titles. He used to steal people's titles to homes. And I was like, how do you steal someone's title? But he had this whole system. He would go in and he would sell the house and sell it from under somebody and he would create a phony, false name,
there's
an identity in somebody's title. Yeah.
I've seen a lot of that, and that it's funny you bring that up though, because that's a product that isn't even necessary. It's just a great marketing ploy. Matter of fact, the Attorney General of Maryland put a big memo out on that whole thing to talk about that and that's why you have title insurance. It's basically title insurance to protect your title, but they're selling it as title lock or whatever it is.
That's crazy. Yeah. I guess people see opportunity to take advantage of it.
Yeah, sure.
But yeah, it's very important. What you said is very important to surround yourself with the right people. And I keep telling people, like, a lot of investors call us. Remember, like, they got like one lady called us. She's from out of town. We gave her an estimate to rehab her property. She didn't like the estimate, so she shopped money. Got her cousin to do it. He got her for $60,000. So then she called us back to do another estimate. He said it's still gonna be the number, so it's too high. She got somebody else to do it. He got her for $50,000. So then she finally came back to us third time, like, go ahead and do it. I'm gonna take the loss. But if she'd had a reputable contractor or somebody to do the work first, she wouldn't have to worry about that in the beginning. So that's why that's so very important. And I try to preach that all the time.
And then, in her case, you know, the lender, I think, wasn't, well, I won't say he wasn't responsible. I think he recommended somebody who wasn't the best contractor either. So I think that's the thing too. Like, you know, because he, I guess they felt obligated because what happened, you know.
Right.
So, you know, you know, you gotta. I think that's the thing. You know, have somebody you trust. You gotta vet people. I think sometimes we have this good feeling in our gut about a person, and that thing, it probably steers you in the right direction more than it doesn't. You know, we can read all of this stuff about, you know, somebody's, go to BBB and look at somebody's rating and all of that stuff. But sometimes, man, you got to just sit down and have a conversation with somebody and feel them out, you know, because I think, and ask around. I think if a person, you know, if I'm asking about True Title, or if I'm asking about you, hopefully, you know, you got a good reputation, right? People who've done business with you, you know what I'm saying, who would say, you know, like people who've done business with Al would say good things. You know, I think that can weigh more than, you know, how much money somebody's made or how fancy their website looks. You know, some of the other things that we tend to put value in aren't the things sometimes are the best things to judge character in when we're making a decision and doing business.
Yeah. And maybe they learned the system under somebody that wasn't as ethical.
Right.
Maybe they don't know the right way. Maybe they haven't been around people that do things the right way and is honest and tell the truth. So they may not know what that looks like.
Right.
So we can't really blame them if that's the situation. But you can ask around, like you said. There's people with good names out there. Like, no, you never hear somebody say something negative about Jeff. And I
don't know about that.
I never.
I can give you two people.
No, I don't want to know. I mean, I try to keep my name good. It's, you know, always good. So if somebody ever say something negative about me, I always tell people, tell them to hold on, call me on a three-way, and put them on the phone with me, and let's see what they saying negative, so we can straighten this out right now. So I think that's very important.
Well, that and like I said, I was talking about before, which is making sure that you know how to get stuff done. That starts with a mentor. Yes. And then also we've got some resources out there. So people looking for, say, trying to get a hard money loan and don't really understand how we underwrite it. Because a lot of times I think people just don't really understand like, well, what is why can't I get this loan? Right? Like I think it's a good property, but why can't I get it? And I wrote a paper some time ago called like seven steps to hard money lending, to getting to guaranteed hard money lending approval. And it was a guide, if you will, to help people understand the 4 C's of underwriting that a hard money lender goes through, and then the E, which is the exit strategy. So the 4 C's of collateral and credit and character.
Okay.
And So I think it kind of walks people through that, and it says, hey, this is kind of what the hard money lender is looking at. So you need to be a reflection of that in a positive way, so that and a lot of it is raw numbers, there's no doubt. But some people forget about even the character part of it, because most of my hard money lenders, they will not lend to somebody unless and until they go to the property, meet the borrower at the property, and talk to them eye to eye and see the property, because they want to know who they're dealing. This isn't like dealing with $1 billion bank. This is dealing with an individual that has money that's going to lend you his money out of his bank account, and he needs, or she needs, to know that you're legitimate and that you have good character. Because if you don't answer the phone when the lender's calling you, or you don't show up, I've had that. I went to look at some collateral and they just don't show up, and we're an hour late. I'm like, well, what's that say about your character?
Right. He's trying to borrow money from you.
Yeah. So if you're not going to answer the phone, or you're going to be late, or you're not going to perform before the loan, what's that going to look like after you get the loan? Yeah. So there are some steps that and you have to just make sure you're walking through some of that. And I've got some other pieces out there about, contract stuff and how people, make mistakes in the contract world, trying to do an assignment as a fix and a flip as an assignment, or vice versa, and not structuring the contract correct. So those are the types of things I think people really need to learn, and it just takes experience. There's an old saying out there that there's this a parable about this younger guy, and he's on the golf course with an older guy who's been very successful in his life, and the younger guy says, "Hey, you're so successful in everything that you do. I want to be like you, and how do I do that?" And he goes, "Well, I make good decisions." And he goes, all right, I understand. Obviously you do. Look at you. So, well, how do I make good decisions? And the older guy says, well, you have to get experience. You just need a lot of experience to make good decisions. And he said, all right, well, that's great advice, and I really appreciate that. But can you tell me how to get that experience? And he goes, well, that's the easiest thing of all. The old guy says, all you got to do is make a lot of bad decisions. Yeah. So I think, it's everyone's going to make bad decisions. It's not a question of, when you might get a little hurt or touched in this industry. Right. But that experience, if you use it wisely and you can control it by doing things the right way with the right people, you can come back from that pretty easy. Yeah, it's funny. I say this, and I know we got to wrap up, but we just had that happen with one client was contacted a hard money or private lender. Yeah. And the lender showed up to look at the house, and I was showing up to look at the house, and the guy didn't show up. It was a house that we wholesaled to him, and the lender was showing up to look at the property, and the guy who was trying to borrow the money didn't show up. And the guy was looking at me, and I was like, so then we got to talking, and he knew Al, and then I was telling him about some of the other stuff I did, and we actually kind of hit it off. And I actually sent some people. I referred some other people to him, for his product. But it was interesting. He said, "Well, this is not boding well." Just what you said. Yeah, because he didn't want to loan the money. He didn't want to loan because he didn't show up. He's like, just what Jeff said. He's like, you show up. So true. Right? Yeah, and
you showed up just to open the door.
Right. Yeah, I showed up to show them the property, and it's definitely something that's different. I think people look at it as how you said in a big institutional bank, which is more impersonal. This is a more personal sort of transaction. I think it's a very direct relationship. Yeah. It's an intimate relationship that you have because you want to stay with that person for a long time because they have the money and you need the money. I want to, because that's sort of your area of expertise, Jeff. I want to talk about structuring your contracts and assignment deals, because I know. Just listening to you earlier, you were talking about that there's some nuances that sometimes we as investors, as wholesalers may miss
and doing a contract on a property. So could you talk a little bit about that, like from a legal perspective, your expertise, how that may make a difference, and how that could affect your deal? And
Well, I'm waiting for the day that I'm sitting in my office and an investor brings me a contract written on a paper napkin. I just got a contract the other day that's about one step away from that. It
Wow.
was one paragraph.
Wow.
And look, a real estate contract it's kind of like speeding. It's, that whole theory of it's only speeding if you get caught.
Right.
It's like, if you have a one paragraph contract, which is wholly inadequate, but it is in writing and it's signed by the parties, and then you end up going to closing, it's kind of like it worked, right?
Right.
The problem with that is, what if it doesn't work?
Right.
What then?
Right.
And that's when things can, go wrong. What's the chances of an airplane going down? 0.001%.
Right.
What's the chance of you surviving if the airplane goes down? 0.001%.
Right.
So I think, it's really just, it's driven by, in some ways, the parties, but also as a lawyer, for me, it's important to have all the key elements spelled out and have the, and I call them parachutes, make sure that you, as the person that is working on your side, to make sure you have all the correct parachutes to pull out of the contract, or if you're trying to hold the other party to the contract, you want them to have as few parachutes as possible. So in an assignment type of transaction, it's important on the front end to have as many parachutes as you can with the seller, the original seller, because you want to have maximum flexibility to pull out of that deal. But on the other side, when you assign the contract to the end buyer, and you may or may not know who this person or people are, you don't want to give them the opportunity to escape. So there's some nuance to how to set up the front end contract for yourself, but also make sure that the person on the back end is kind of tied to the deal, making sure you're collecting the right deposit and the right kind of deposit. There's a difference between a deposit on the contract and a deposit on the assignment. And I see that mistake all the time where someone who's the assignor, the person who's assigning the deal, they'll say to the end buyer, okay, it's a $5,000 deposit, and they'll give them $5,000. It won't really be spelled out in any document. They're just making the assumption of what it is. And on the other side, there might only be a $1,000 deposit on the original contract with the seller. So what does that $5,000 represent? Does it represent $1,000 to the original seller and then $4,000 to the assigning person? Is it $5,000 on the assignment? And that's where the arguments come in. And so my assignment contract, as an example, clearly spells that piece of it out, differentiating between the contract and then the assignment piece and what each of that is. Same thing, I've seen people make a terrible mistake where on the front end, they contract, they do a flip, and they'll sell it on the second contract on the back end. And that one has no contingency in it. Basically, just says, I'm selling it to you for $100,000 because he knows he's got the contract on the front end for $70,000. He's going to make a $30,000 spread on it, or she. And so the problem is, what if the front end contract doesn't close?
Yeah.
What if the front end contract has a problem? And now you've got a back end contract. You have no contingency in there. You don't have a parachute with the seller for that.
Right.
And now the end buyer says, I don't care what your problems are. I'm relying upon your contract. You sold me this property. You said you own it. Sell it to me.
Right.
And then you've got damages. You've got all these other potential claims. And we actually went through that on one or two properties that we had under contract, where we made sure that we had in the first contract the second contract, that it was expressly contingent on the settlement and sale of the first contract.
Right, I remember that.
Understanding that if it wasn't going to go through, we're not going through the second contract.
Okay, yeah.
So those are examples. Yeah, a lot of people just they just skip that or don't know it. And so I have like a templated real estate investor contract that I tend to use to help my investors out. You can't think of every scenario every single time and cover every single scenario, but you could do a pretty good job of, covering most of the things that come up, and then just maybe customizing a little bit one way or the other. And it's not overly expensive. Investors are always having to be aware of or very conscious of the expenses that they have. And they never want to spend a lot of money on an attorney to produce a large contract. So you have to do that. You have to weigh and you have to balance between a standard boilerplate contract and a custom contract, and kind of understand where you might need to customize the standard boilerplate one for a little bit of money.
What kind of challenges, man, have you experienced? Because I know, like, with myself and working with Al, some of the challenges is, like maybe closing and dealing with contractors, or sometimes you get a property and it looks good, but then when you start tearing the walls out, you got structural issues. So, I mean, I know but like for you in your space, the title space, the lending space, and the contracting space, or contract space. What are some of the issues that, or like you got a story, a horror story, or just a lesson learned story?
We could spend a lot of time on those types of things. And I did a presentation recently where I talked about the different mistakes that I see along the way with investors and their contracts. We don't have time to get into all of that today, but just as an example, you always want to do your due diligence up front. You always want to make sure that and this is just great advice for anybody. It doesn't necessarily have to be, what I'm doing, but if you're going to get into a front end contract or even a back end contract or an assignment situation, it's always a good idea to get on the public records and understand that you actually have the right seller who has the right capacity to sell, because that's where I see a lot of my challenges, where people will bring a contract or bring a deal and they've either structured it incorrectly, the paperwork doesn't match the business deal. This is an assignment, but by the way, I put it on the contract on the front side, then I auctioned it off and put another contract, another contract on the back side. Well, that's not an assignment.
Right.
That's handled differently on the settlement statement. It's handled different money wise from a title perspective. And so mapping those two together. And then a lot of times I'll see issues with capacity where one of the person who gets it under contract doesn't understand that everyone on title has to be on that contract. It can't just be the dude's son that signs it on behalf of dad. Right. Or mom died, she left it to me in the will, so I can just go ahead and sign the contract.
Yeah.
Well, it doesn't work like that. So
just had that.
So a lot of times you do need to do your upfront due deal. A good story for you is we had a situation that was an assignment deal. The person who was the wholesaler brought the deal to us, and they had assigned it to an end buyer. But what had happened was they only got the signature of one of the two people on title. And but we didn't know that. Might have been an estate situation, I can't remember. But the end buyer, because it was land, it was raw land, and they wanted to build on the land, build a house. They had a boundary survey done at a cost of $1,500. And this was prior to close. And then we get closer to closing, and we realize that, well, wait a minute, we don't have the right people on this contract. And we told the wholesaler this, and then it became a big mess, because now all of a sudden the sister came in and said of the seller, this property is worth a lot more than this.
Right.
I'm not selling it for that, and I'm not signing a contract. So now you've got an end buyer that has expended money, time, resources, and everybody has. Everybody has. And you can't get the deal closed because of that.
Wow.
Wow.
So some of the things,
about that stuff.
yeah, well, I mean, so some of that is checking the public records and then making sure that everybody who's supposed to be on the contract is on the contract. If somebody has died, that there is an actual estate open to be able to sell the property. I've seen bad POA. Somebody say, well, I have power of attorney over this person, and that power of attorney has to be scrutinized and analyzed to make sure it's legitimate, and that there's no self-dealing issues. I mean, we'll see that too, where somebody will, there was actually a claim that came into our office one time regarding that, where somebody had transferred the property from father to son, and then the son took loans out and did whatever he did, Well, when it came time to collect and foreclose on the bad debt, all of a sudden now dad and son were in cahoots.
Whoa.
And the dad said, well, he had no right to take this property and self-deal. And
Right.
so you have to be careful about those situations too, where there's a homemade deed, power of attorney. Those are some of the horror stories that I see,
Wow.
I think,
So-
go ahead.
Good. No,
I
good.
think, and what Jeff and I have done a lot, and I think this is a good alternative for people that want to be an investor and have investment properties and get an income stream. A lot of times what we've done is turnkeys, where if they don't feel as though the investor or the beginning investor or the seasoned investor want to be involved with the contract situation, dealing with the contractors, finding a good property in a good area, and then finding tenants, because that can be stressful in and of itself. They can buy a property that's already been rented, that's already been renovated, that's already been rented, and it's already producing income and an income stream, and just simply do a contract with the owner of that property to buy the property, in essence, buying income. As long as they can negotiate the correct price to see the amount of margins that they want to have in the end. So say if you want to make $500 above what your mortgage is, your expenses, your mortgage, your taxes, your insurance, say if all that comes to $550, and you want to make $600 a month above that, and the renter's bringing in $1,200. Well, that's a good deal to a lot of people, especially if you can get equity on that. So that might be an alternative to people that don't want to deal with the ins and outs of the construction, finding the good deals, riding around Baltimore all the time looking for properties. That's an alternative. I mean, you think so, right, Jeff?
Sure, absolutely. And I think it just goes back to my point earlier of somebody deciding how deep they're going to get themselves into this business, whether they're going to be a full-time investor in the investment real estate business, or are they going to be a part-time? And the returns that you get really are driven by that. I make that argument even with my lenders who have money that they want to put out there. Well, they might want to get double-digit interest rate returns, but their returns might only be 10% or 11%.
Right.
Whereas if you're very active in the marketplace and you actually flip houses or assign contracts, you could make 30-some% average
Right.
yield on your money. And so it's a much greater yield, but you're a much more active participant
Right.
in the
Taking more
marketplace.
risk.
And sometimes it's better to take that lower return, reduce your risk, and be on the loan side.
I agree.
So it's to your point of turnkeys. If you can buy a product and you can get a good yield on it, calculate your yield, grow the equity in the property over the years that you own the property. It's a nice product for certain investors out there.
So what should someone do if they're looking at this and they're like, okay, I'm either in the game already, buying properties, or I want to get in the game? Like, how would they reach out to you? Through hard money bankers or through your law firm?
My law
Through
firm. I don't really do much day to day operationally with hard money bankers. Chris and Jason pretty much run the show there. I've kind of stepped away from that just to focus on the title and the law practice and representing my other hard money lenders in addition to them and other folks. So the best way to get hold of me is through my email, which is Jeff at Jeffrey P Shiller, JPS, Jeff at JPSLawFirm.com. That's my email address. And then that kind of connects up to all the different resources that we have that they might be interested in, whether it be hard money or title or contract work, things like that.
Can they catch you at True Title?
Yep, True Title.
Google True Title.
TrueTitleInc.com. My office number is 410-531-0385, and I'm unfortunately there way too much.
And if you don't know how to structure a deal, I can't tell people how important it is. If you do not know how to structure a deal, or you find a good deal and don't know what to do to find a buyer and you don't want to keep the deal, then you should you should have somebody like Jeff in your corner. And I mean, I put a lot of pride in having Jeff on my team because I bounce a lot of stuff off him, and he listens. Even when he don't feel like listening, he still listens. So I'm happy to have him here. And I'm gonna tell you one thing, because I really my biological father really wasn't there. Then my mother, left when I was like 18 or whatever. So I really looked up to Nola and Dave. I really envy.
Great shout out to my mom and dad.
Nola and Dave Shiller.
My first title company would have never, ever run without Nola being there. That's for sure.
Man, I loved them to death, man. So I really envy that, man. They were great people, man.
They loved you too, very much. Yeah.
Man, I just think about them all the time. So that's one thing that I admire about you a lot. And I look up to you, man. You was able to have Nola and Dave all them years, man. It's great. So
yeah, thank you. They were a blessing in both of our lives, and so they will be missed, both of them, for sure.
And I want to, he might not want me to say this, but I'm gonna tell what Jeff did for me. This was a true friend. I remember the market went down. What year was that?
2008.
Yeah, 7, 8.
Around 7, 8.
Yeah.
So I had a big line of credit with BB&T. So they closed my line of credit. I bought a lot of houses, and I was using line of credit to fix them up. But they closed my line of credit. So I had a partner that, I don't want to talk about him, but I had a partner, but I got in debt. I got in debt, and I got behind the 8 ball pretty much. I never filed bankruptcy or anything because I didn't want to do anything like that. So Jeff stepped up, was like, man, why you all depressed, man? Get back in the game. He gave me like $100,000 to get back in the game, and then I just kept moving after that. So and he didn't even really ask for the money back. That's the thing. I was just stressing because I wanted to pay him back, but he wasn't even tripping. I mean, I ended up paying him back.
Well, thanks, Al. Now everyone's going to be emailing me, asking me if
give me 100. Give me 100. No, but that's just something that like
I'm gonna see you before you leave.
no, but that just meant a lot. It just meant a lot to me, Jeff. I just want to let you know that.
Well,
man.
you'll probably. I guess the last thing I'll say about that is I can count on my, 2 fingers, the people that I would give money to want a handshake, and you're one of them.
Appreciate it, man.
So yeah,
I value you a lot. So I just want everybody to know that. Go ahead, Mel. I know you had some more questions.
That's a good story. I think that's a good story, and it goes back to what we've been talking about. You've been talking about character, integrity. You're talking about the 4 C's when you're talking about lending. You're talking about mentorship, having somebody around you. And so, that story kind of segues into all of that. And talking about, and one of the themes we've been talking about, Jeff, I know this is your first time on the show. We love for you to come back. But we always been talking about who you surround yourself with, the people you surround yourself with. Not necessarily just friends, but maybe with title company you use, the attorney you use, contractors you use, all of those folks that help you in the business world that can help. It. And having a good attorney can make you or break you. Having a good accountant can make you or break you. Yeah. So those are the things we talk about. And just because somebody has a law degree or accounting degree or has a good hard money business doesn't mean they're the best fit for you.
Right.
And so that's a good story, Alf. I'm glad you shared that.
It's like I tell people when they have like a criminal case or a personal injury case, and they come and they call me and they say, hey, can you help me with this situation? And I'm like, sure, if you want me to malpractice. So you got to know who you're dealing with. You don't want to go to a certain kind of attorney to do what I do, because it's a niche world that I live in, and I would never argue that I could handle a malpractice case.
Right.
And I would never have a bookkeeper if it wasn't for Jeff, Marion.
Yeah.
So we're going to shout out Marion.
Yeah.
Kurt, I want to say hey to Kurt. Love Kurt. So what's up, Kurt? Through the 08, I guess that's the year.
Yeah.
And all the loans I had out, I was glad that I didn't file bankruptcy. Communicated, paid all them back, like Dr. Frost and all them.
Yeah, Dr. Frost.
Yeah, so, it's just ups and downs. I don't want anybody to take this and be like, real estate straight up. It's not going to be any difficulties, no challenges, no stress. But, if you got people like Jeff Shiller on your side, then it's going to increase the probability that you're going to be successful. That's all I want to say.
Well, first, thanks again, Jeff, for coming.
Thank you, Mel.
Thanks, you, Al.
Thanks,
and we're going to wrap this up. But please continue to follow us on the Real Estate Podcast on all social media platforms. You can see us. We're on Spotify, Google Podcasts, therealestatepodcast.com, Facebook, LinkedIn, on Instagram. We are at the estate_podcast. And please, YouTube, like, subscribe, and follow us on YouTube, therealestatepodcast.com. And every Monday at 6 p.m. on handradio.org. Check us out. The Real Estate Podcast airs there every Monday at 6 p.m. Radio app. Shout out to King Richard Good and the Hand Radio family. We appreciate you. We see you guys next time. Thank you.
Don't forget to subscribe, and let people know about the podcast. because we're trying to get as many followers and many subscribers as possible to get this good information out to as many people out there that are interested in real estate and want to get into real estate. So thanks for tuning in. Hi, I'm Al Davis.
And I'm Meldon Dickens. Please tune in every Monday at 6 p.m. on Ham Radio to check us out on the Real Estate Podcast.
And don't forget to subscribe and like our YouTube channel, The Real Estate Podcast.